Good morning, folks, and welcome back to Almus Market Mornings. Inflection points from the context of markets are levels beyond which major trends can start. These trends have the power to change underlying businesses. Look at silver prices, for example. They have tripled this year, and that has resulted in solar panel manufacturers to revise prices. Silver now accounts for 30% of the cost of a solar panel as compared to just 14% last year. We are seeing inflection points even in currencies. Yen trading near the 160 levels against the dollar. Euro looks ripe to break down. So overall, the big question to ask is whether we are about to see a resurgence in dollar strength. Good morning, JK. You have advocated for dollar strength in the past. What are you seeing currently as the key driver?
Good morning, Swaraj. Yeah, I think barring the yen, which is, of course, at a very key level, um, overall the dollar still doesn't seem to be getting a traction either side. But I do agree that there is some strength that is visible in the dollar. If you look at its reaction to positive news, it's much more compared to the negative news. For instance, yesterday, a couple of triggers we saw. Trump said he had no plans to oust Chairman Powell. So that was one, factor. Then again, there was a statement by him saying that there is no plan to attack Iran. These were the two, uh, you know, news or rather the expectations that had led to dollar falling last week. Well, it quickly retraced now. It's knocking on a 99.30 key level on the dollar index. Euro is trying to break 1.16. But within the currency space, there are packets where you can see some important levels. For example, the Chinese one has clearly broken the 7 psychological level. It trades at the 6.96. This is happening after a very long time. And not only the market is moving to a stronger yuan, but also the Chinese central bank itself has been fixing the yuan midpoint on the stronger side, which is actually acknowledgement of the fact that Chinese yuan needs to be revalued. Yes, they won't allow runaway strength, but the direction seems to be somewhat clear that Chinese yuan after it broke the 7 level, which you can probably call it as an inflection point. It seems that it can head towards the 6.85 as well, but it will have its own pace. It won't like have a big runaway strength. Yes, on the end, definitely 160 is the line in the sand, uh, or I would say 160 to 162. So that is the level where the Bank of Japan intervened in September 2022 to a very good effect. And we saw yen strengthening by nearly 15%. Now, there is a dilemma. There's a for Bank of Japan. Now, if they want yen to be not weakening more, they have to either intervene or they have to raise rates, and the raising rates comes with its own demerits, because then the asset prices will have fall, and even the carry trades may come under a threat. So intervention, again, intervention is something, if going by the statements from the Bank of Japan officials, it needs some sort of a alignment with the US as well. So intervention may not work because the markets are also much larger now, and it needs a huge intervention for it to succeed. And failed intervention is worse for the currency. So this is the level where we have to expect. But if they don't do anything, they don't raise rates or they don't intervene, quickly dollar yen can go towards 165 or even beyond, because the markets think that that's the only way they can make money out of selling and buying other cheaper assets. So that all eyes on Bank of Japan action. One more factor to consider is the Prime Minister possibly calling for a snap poll. Now, while this was initially seen as a negative for the markets, then we have seen that possibly if she comes back with a firmer majority, it will boost her steps towards more fiscal spending. So that's what the market is looking at. So there is a lot of factors going around yen movement, and those are the factors that market is focusing on. All other currencies barring yuan or sideshow. On the metals, yes, after a massive move, I'm only seeing a consolidation, because particularly on the silver, it has broken whatever the levels guys had been projecting so far. And now, of course, the three-figure mark becomes attraction. Possibly that's where the some sort of decisive move can emerge either side. A clear break of 100, then people can look at even more uh, movement on the upside. But if it resists, and if there is a steeper correction from there, then that is something market will probably not bank upon right now, because the trend is very strong. Now, one thing about the metals is also that uh, they for it to be sold, they have to actually perceive some good returns in other markets. No, but that is not visible. For example, the stock market, there is an ongoing concern that they are richly valued, particularly the tech sector. And if you look at the bond market, there is a sense that it is again ripe for a steep fall or yields to rise because of the debt and the deficit issues that the US is facing, Japan is facing, and even to some extent Europe is also having that fiscal issues. So that's one major reason why people may still hold on to the gold and silver positions. And in fact, there's a statement by Polish central bank, who were one of the largest buyers of gold last year. They want to increase it further this year. So this sort of approach by central banks will ensure that we don't get much of a correction. Also, corrections will be very minimal as well. Now, for the rupee, we of course had a break yesterday, holiday, and then there was two things that probably keep the market interested. One is the trade data, which of course did not worsen much for the month of December, marginally rising. Both exports and imports rose very, very marginally. So there is no impact, at least continued impact seen from the higher tariff that US has imposed. So how whether the market will look at it as a stabilizing trend, or it's just a matter of getting more data before we come to that conclusion. That is one thing. But yes, for the time being, at least the data trade deficit remaining under control is somewhat a cooling factor. Another factor is there is a statement after a very long time. There's a statement from Indian official who is saying that the trade deal between US and India, the first tranche of it is expected to happen. He is going close to being finalized, although again, there's no commitment as to the timeline of that happening. So that these are the two things that the market will be focusing on. We already had inflation, which is well under control, and RBI has leeway to cut rate more as well. But none of this is reflecting, at least so far, in the markets, because the rupee continues to trade closer to 90/50, or between 90/30 and 90/40. And then the stock markets are not able to hold on to any gains based on any of the news. So and the FIS, that I think that we had very large outflow on Wednesday of over 4,400 crores. So the outflow for the month, or you can say the year, is almost touching 2 billion. So nothing is changing. I would again say for rupee, 91 will be an inflection point. That is where RBI had massively intervened and brought it down to as low as 89.50. But then if the conditions continue to be the way they are, and there is no much improvement in the trade deal prospects, then 91 likely to be tested, and RBI is also likely to be tested. Thank you.
Thank you, JK. And a lot of inflection points in various markets. Euro, of course, trying to break below 1.16. But overall, it looks like dollar index still within a range, but definitely a tendency to sort of strengthen. For yen, of course, it's a significant level between 160 and 162 against the dollar. We have seen previously BOJ intervene. And of course, an interesting development over there is the snap poll that PM Takaichi has called for. If there is a firmer majority, there may be more fiscal stimulus. So that this narrative would be closely looked at. Metals in a slight consolidation after a significant rally. Uh, Silver, of course, I mean, all levels have been broken and it looks to test the $100 mark. And when it comes to our own rupee, we had the trade deficit numbers which didn't worsen much in December. Both exports and imports rose marginally, and there is some statement about the trade deal, the first tranche of the trade deal with the US to be finalized, but no timeline of the when. So that would be something significant. Otherwise, the narrative of FII outflows continue. This year, it has already touched $2 billion, and that's something to look at. 91 would be a level for USD INR as an inflection point. That's it from us today. Thank you for listening. Have a great weekend. We'll catch up on Monday with the fresh round of updates.